Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for September 14th, 2007. And I'm just going to quickly get into some things here, guys, before we get into the market. Number one, on the website, InTheMoneyStocks.com, we posted the next two webinar dates. And again, that's a webinar. It's a seminar that you do from the comfort of your own home over the computer, where we do a seminar on your computer. You see all the slides as we go through it. We talk to you over a mic on your computer. You have speakers and you can hear us. And it's basically a seminar, but it's less expensive than a seminar because it's in the comfort of your own home. And it's this seminar will be an unbelievably good seminar. It's the apprentice seminar of our three-course webinar course. We have the apprentice and the journeyman, which is the second one up. And then the finale is the final seminar, which really gets into major hardcore technicals. Really what you need to do is, if you're a beginner, you need to go through all three because you won't understand the second and the third without taking the first. Those of you that are intermediate levels can do the Journeyman seminar, which is the second one, and get right into the third one afterwards. The apprentice seminar is going to go over all the technicals, the basic technicals in reading a chart, from candlesticks to understanding how to read charts, basic technical analysis, even some fundamental analyses, even though we concentrate on technicals, as you all know. So again, you can go to InTheMoneyStocks.com, sign up for that, get in while you can, because there are limited spots in this webinar, guys. We don't have unlimited access to too many people, but we like to keep things small so it's more personal, and we can answer questions as you guys come up with them during the webinar itself. Okay, guys, getting into a few other things, we're going to quickly look at the NASDAQ chart right here. This is the daily NASDAQ chart, and we're just going to go over some patterns formation. Now, over the course of this week, we've done a lot on trend lines, and we're going to show a few trend lines again today, but next week we'll talk about a new technical style, whether it's not trend lines, and we've done moving averages and how key those are. We're going to get probably into some other technical analysis tool and kind of analyze the market as we go based on that tool. Now, what you see here is the NASDAQ chart, and what we're seeing here, we saw this reverse, or this inverted head and shoulders here, and we talked about head and shoulders patterns as how they're a breakdown or break up patterns. A head and shoulders is a breakdown pattern. An inverted head and shoulders here was a break up pattern. But again, we remember, if you guys remember in the last videos, we talked about how this wasn't a good shoulder over here, so we didn't think it would really come out. And we were correct there. We tried to break up here, and then we failed and came down here. However, what we are seeing is another possible head and shoulders formation coming in here. And let me get out my tools. I went over this a little bit yesterday on the ES chart, but what you're seeing here is a shoulder pattern right here, a head pattern right here, and another shoulder pattern here. Alright, and again, today's candle, which is this one right here, played directly into that. So you have a shoulder, head, shoulder pattern. You look for a breakdown of that line. Alright, you get a close below on that line, so a close below this line by connecting the bottoms there, and it can signal a major breakdown in a chart pattern. Possibly, we should technically see a breakdown to this low. At this low, and this is again what we're calling for, we are calling for a move down to this low once that head and shoulders pattern is broken, and then at that point we'll see a little bounce and we'll have to reevaluate. But it's very likely we could see a major move down through that low even after a small couple day bounce. But ideally, when you're playing this game here, guys, if you're going to go short on a break of that head and shoulders pattern, what you want to do is you want to go short once you get a close below on the daily of that level, that line I just had drawn in there. And again, if you guys join the webinar, you guys will learn all this stuff, how to recognize different patterns and so forth. But you're going to look for a short there, then you're going to cover at this line here for a couple day bounce. You're going to get a bounce up, and then we're going to come down, most likely retest and break below this low and possibly go much lower. Okay, looking at the day here today, guys, we saw exactly what we were talking about yesterday. And a lot of people probably questioned us in the morning because we gapped down quite a bit on the jobs numbers this morning. And what did we say yesterday and the day before? We said Friday is going to be very slow, very light volume, and ideally, when there's light volume in this market, we've said this over and over again, you're going to see basically a flat to sideways to possibly up move in the market. And that's exactly what we saw. We saw a gap down this morning, and the NASDAQ was down as much as 22, 23 points at the open. All right, and you can see that all the way down here to 25.70s and change down here. However, based on light volume, as we always say, you got to bounce up, a small little retrace, bounce up, small little retrace, and we basically just stayed in this trend most of the day, okay? Ever since really 10:30 right here, we stayed in a small trend all day, light volume, and where did they close the markets? Even after we looked like we were going to go down big today, they closed the NASDAQ up 1 point on the day. So again, this is knowing how big money reacts and how they want to close this market positive on light volume, and understand how light volume lets them manipulate the market and basically do what they want, only using a small portion of their funds at risk. So that's ideally the way they want to do this. Now, we did close near the highs of the day, but on light volume, you really can't really read into that. Okay? Now, what's interesting here, guys, is we have a couple things coming up next week. Monday's going to be slow because the Fed comes out at 2:15 Eastern Standard Time on Tuesday with their rate decision. Based on that jobs number today, I have to believe it's going to be at least a quarter basis point cut. And I'm going to flip back to the daily so we can look at the daily again here and notice how we still are on a downtrend here. Okay? Now, what else do we notice here, guys? The other thing we notice is that the Fed coming out with a rate cut of at least a quarter basis point is factored in the market at this point. This whole move up here, all right, this whole move up here is now has now factored in at least a quarter point cut in the Fed funds rate. Okay? Now, having said that, the question now becomes, do they do 0.5? Do they do half a basis point? And that could happen. That very well could happen, and in that case, the market might rally. But remember, it's all based on contrarian thinking. This market is psychologically based, and you have to understand psychological stuff. So again, that's one of the things we would go over in the seminar. The Apprentice Seminar will go into all the psychological moves in this market so you fully understand what to expect and how to read it properly, and you don't get caught off guard by the manipulation and the hype by the media. Okay? Now, what you're going to see now possibly is, while we're all thinking the market will move up on a 50 basis point, what it could do is spike up initially, fool everyone, and then spike down. And that's been known to happen. So usually we say the first move on the Fed rate cut or rate, whatever they do here is the wrong move, and then it reverses because they want to get all the amateur longs jumping one side of the gun here, and then they can basically take their money by moving it the opposite way. Okay? What we will look, and we're going to flip to the ES futures chart now for December. Again, we switched over yesterday to the December chart. The other thing we want to talk about here again is, well, a lot of people are thinking we're going to fall on the Fed rate. If it's only quarter basis point, we're going to fall. What I do caution everyone is look at the bigger picture here. Everyone should remember what happened last options expiration Friday. They took every amateur's money in that play, and they basically took it. Every amateur in the book on that Thursday when we dumped out hard and we were at the lows, and this is Thursday right here, guys. Noticing this, when we were down here, every amateur was input plays, and they're saying, yeah, we're going to be king because this market's going to come down and down and down, because that's the amateur's mentality. All right, and the whole point of you guys watching this video, I hope you start to realize that and kind of change your views and not be kind of one of the sheep. You don't want to be one of the herd. You want to be one of the herders, the tending their flock. You want to be in control. Okay, and when every amateur was buying puts here, expecting the market to fall, what do? They rallied the market up here. The Fed, this is options expiration, was this day. The Fed comes out Friday morning, which was what a maneuver that was, and spikes the market up even more. So you had the market gapping up here, and basically every amateur got stopped out of their puts on options expiration. The day it was expected to expire, they got taken out of their puts. They lost their money, they lost their premium, whatever it was, and so be it, okay? So what I'm saying here, guys, is everyone's expecting the market to get crushed after the Fed next week. Let's be aware that that's the psychology. That's the herd mentality there. So be aware that there is a slight chance, because options expiration and it's triple witching, at least triple, it might be quad witching, next Friday, they might try and keep this market very volatile, but ultimately close it flat on next week. So they might spike it down, then spike it up, then spike it down, spike it up, ultimately bringing it possibly positive on the week Friday. What I'm thinking here, and us at InTheMoneyStocks.com, is what they could do is keep it afloat till Friday, options X, then drop the market. Okay, so again, if you're looking for a short entry, you got to be very careful going into options expiration. It's all a maneuver here, guys. The last time options expiration, the Fed came out. This time they're coming out on Tuesday, and options expiration is Friday, and it could be a very volatile week. All right, volume will be huge. That when the Fed comes out, volume will be huge in this market. The market's going to go one way or the other. We just don't know yet which way it goes. Okay, it's all in the wording of that statement. When they say we're cutting a half a basis point or a quarter, that's going to be kind of secondary. It's all in what they say on inflation and on what they say in the future of cuts. Okay, guys, that's enough analysis for today. Here's the ES intraday. You can see the choppy trade. Really nothing going on today. be careful going into next week. I will try and do a video this weekend to do a little more analysis on this market. Alright, so stay tuned. In addition, guys, next week, if you're going to join a chat room, you got to join it next Monday. Be in next Monday. It's very inexpensive. We do some awesome maneuvers, some awesome technical analysis. But because of the Fed, you're going to want to be in there to learn from this. Alright, this is going to be key. So join the intraday stock chat on InTheMoneyStocks.com. It's only $199 for the full month. Basically, you get one-on-one almost with traders in that room. Just phenomenal. You can ask questions. It's like, it's pretty much second to none. I can't think of anything else. In addition, we're going to get ready for some swing trade alert plays coming in here. We've been very cautious going into this Fed meeting. Once this Fed is out of the way, we can actually start reading the pure technicals and not worry about getting, a spike up or a spike down in the wrong direction. So we're going to have some key swing trade alert plays. Join up, guys, now. Do the Apprentice webinar. Going to be phenomenal. You can also pre-register for the other webinar. So you can go on InTheMoneyStocks.com under webinars and do the Journeyman webinar and pre-register. We will announce those dates in about a week or two for those coming up. Have a wonderful weekend, guys. I'm going to try and do a video this weekend for everyone. Take care.